Saturday, July 1st, 1:30 p.m. New York time. So yesterday, we just completed a week, last day of the month, and the last day of the second quarter for the year. So let's go look at the higher time frame, which is the monthly candles. Yep. We're going to look at commodities. Three categories in commodities are energy, such as your crude oils, natural gas, heating oils. The other category is metals, such as gold, silver, platinum, copper, and your agricultural, your corn, your coffee, and livestock. Yep. So first we'll look at the the energy. 10-year chart of crude oil, light sweet crude oil. Understand there's different crude oil. There's Brent sweet, there's Brent crude oil from the North Sea, but we're looking at the WTI West Texas light sweet crude oil. Right off the bat, look at the candle here for the month of June. It's a yellow candle. Yellow candles mean they didn't take out the high or low of the prior candle. Reverse, this being a monthly candle, the whole month prior to June, this big red candle, we never went above or below. Inside candle, inside bar, that's a term. Got it? Indecision. Here's the high for the year. Here's the low for the year. Crude oil is much closer to the low of the year than the high of the year. Going back last year, in June, this is June here this year. Going back to June last year, it's all lower too. June last year was here. Look at that, the high, the low. Huge difference. Gas station prices are different. That gets to be set at the retail level. If you got a problem with that, you call them out on it. And also with your state taxes on energy. Yep, it's different. Taxes on gasoline at the state level. Federal level, that's flat. That's another embedded cost. Yep. So again, crude oil is lower than it was last year. And we're near the lows of this year, crude oil. Natural gas for the month closed green, made a higher high, higher low. The trend is reversing. Huge consolidation down here, reversing. Again, natural gas is lower than it was last year. Here was June last year, much lower. Yep, big difference. Yes, there are more energy financial instruments, but I'm going to focus on these two. Yeah. So fundamentally, United States is into the summer season. United States is into a holiday season, which this is the Independence weekend. And typically in summers, crude oil, gasoline is higher. Typically into holidays, crude oil is higher. As well as more nations are opening back up and backing down from the virus policies, you have more nations opening up, more production. Yeah, one would expect energy demand to be higher. Bullish bias. Got it? Well, if you want to have less demand on crude oil and more on natural gas, you could lobby your country to have its trucks on the highways, its big freight trains, if they're using diesel, to pivot over natural gas. The United States has abundance of natural gas, much more easier than doing the import of crude oil. Again, that takes leadership to do what's best for the people, not what the business wants necessarily. Yep. So again, you have freight trains that run on electric, but most don't in this nation. No, most of them are running on diesel. It's diesel, crude oil, coal, the dirtiest fossil fuel. Coal versus natural gas is a fossil fuel, but it's less dirtier. And it's more energy efficient, costs less. You're dangerous. You know more than most people now. More than your lawmakers and your lobbyists. But again, if you do nothing, remain silent on the sideline, you're part of the problem having these costs higher, such as your power plants running on coal, crude oil. Now we look at the category of metals. Gold. Red for the month. Lower high, lower low. Testing midpoint here. Here's the high for the year. Here's the low for the year. Testing midpoint. We have a wick there, buyers stepping in. If you watched my previous video, you saw I did a swing trade on gold. I bought gold options on Thursday near the afternoon, closed them Friday morning for profits. It was a swing trade because it was 2 days. It was nice. So now I'm looking at the new swing trades, potential bullish setups for gold. Yep. Not the gold mining companies, but the physical gold futures. Difference of performance. Yeah. Looking at silver, red for the month, lower low, lower high. Same thing, midpoint here, buyer stepping in. Trend is still down. Such as gold, the trend's still down. Looking for that reversal to come in, set up. Platinum, or is it palladium, red for the month, lower high, lower low, broke below that inside candle, new low for the year. Strong bearish still down here. And copper, huge use for industrial use. Inside candle for the month, much closer to the low of the year. So the takeaway here is looking at the monthly charts of these metals. Big difference, right? Gold, new low for the month. Silver, new low for the month. Platinum, new low for the month. And copper, inside candle, means indecision, potential reversal, possible reversal. So this might be more of a bullish bias setup getting ready to occur. So I'll be looking for a breakout one way, the top or bottom for potential trade idea. Yep. Be watching this very close. And also gold, because we're at that midpoint. Potential bullish setup, potential bullish setup. Now on to the agricultural, which is grains and livestock. Again, a 10-year grid, each candle's a month. Looking here at corn futures. Corn is not just used for feed for humans. Corn is also used for feed for livestock. It's also used for ethanol. Remember, many nations use sugarcane for ethanol, which is better, cleaner. But again, this nation, Democrats, Republicans, all the way back during the George Bush presidency, put a tariff after the policy changed. Yep, there was a policy that changed that mandatory required ethanol in fossil fuel usage, which at that time, that legislation also put in tariffs on imports of sugarcane, specifically from Brazil, so made that ethanol more expensive, forcing us to have the choice, not a choice, wink, wink, not free markets, not capitalism, but again, being conditioned to accept United States corn at a higher price. Remember, the United States do not require ethanol in your vehicles, in your engines, in your fossil fuel. Nope. So corn was being used for human consumption and animal consumption. So they put a bigger demand on the U.S. corn industry for ethanol. It spiked up corn. If you've been around long enough, you should be aware of this because I've been sharing that for years. And also the bills when this was occurring, because I was following that bill through Congress. Yep, you Democrats, Republicans, and both signed on it, adding tariffs to sugarcane to help the U.S. corn industry, which pocket the money because they passed on the cost to us. So here, corn, red for the month, lower high, lower low, new low for the year. So is your dairy product, is your meats getting cheaper? Again, this is the commodity price. At the retail, is different. They set prices. So if this is lower, somebody's making bigger profits, but not passing along that cost savings necessary to the consumer, nor necessary to the restaurant or the local retailer. Big difference. We're lower than we were last year. Yep. Here's the low of last year. And new low for this year. Again, corn. Now we're looking at wheat futures. Look, we're lower than we were last year. Closed green, made a higher high, higher low. Big retracement and big sell-off. Grain products. Looking at soy. New low for the year. Yeah, we also took out the low of last year. That's soy product. High for the year, low for the year. New low coming here into this prior swing low and also demand zone. Let's go look at the livestock now. Live cattle futures. New high for the year. We also took out the high of 2014. That's right. This is 2014, the high, and we took it out. Amazing. Are you eating more red meat? There's a low for the year. Like I said, new high for the year. Outstanding. Wow. Huge trend from here up there. So what do you think's making cattle cost more? We already saw corn going lower, right? Wheat going lower. Now feeder cattle, new high for the year. Also took out the high of 2014. Yep, amazing. Take that out. So new high for the year. That up like a rocket ship. Yeah, again, are they making more profits, the farmers? Is there more demand for the consumer? Is the product costing more? Do your research and find out, because your mainstream media is not being very transparent to sharing that with you. Lean hog, new high for the year. You're up your pork bellies. Massive consolidation here. High for the year, low for the year. Big difference again from your agricultural of your grain products versus your animal products. There you go. You know more information than most people do on commodities.